Hello dear traders, you're watching Weekly Financial Review on Insta TV with me, Anna Kasatkina. Last Friday, as every first Friday of the month, the main economic event of the US stock exchange was a Labor Department report on the labor market, and the major focus was on non-farm payrolls. The Nasdaq Composite Index advanced by 1.7% to 4,707.78 and ended with a 0.5% weekly gain. Friday's gains on Nasdaq were driven by a jump in biotechnology stocks. The Dow Jones Industrial Average Index gained more than 200 points to close at 16,472.37 and was 1% higher for the week. The Blue Chip Index traded in a 459-point range on Friday, turning a 259-point slump into a 200-point growth. Meanwhile, the S&P 500 closed up by 1.4% at the level of 1,951.36 and recorded a 1% weekly gain. 9 of its 10 main sectors closed higher. Energy and materials stocks surged due to rising oil prices. The U.S. non-farm payrolls indicator has been advancing during the last 5 years, and on Friday it was expected to grow further by 205,000 in September. But the actual figure turned out to be well below the forecasts at 142,000 and was the lowest since March. Moreover, the previous readings were revised downwards by 59,000. At the same time, the unemployment rate remained at 5.1% and wage growth was flat versus the forecast of a 0.2% gain. The participation rate indicator went down to the lowest mark since 1977. The lackluster employment data disappointed the market, which reacted in a strong downturn at the beginning of Friday's trades. But later on, the losses turned into sustainable gains as investors sized up the situation at a different angle, finding in the weak data another obstacle for a Fed rate hike in December. However, a number of Fed officials continued to defend the possibility of a rate increase in 2015. Wynn Resorts Limited shares jumped by 23% to the level of $63.47, making the corporation the biggest gainer on the S&P 500. The developer and operator of high-end hotels and casinos, controlling famous casinos Wynn and Encore, benefited from the news that the Chinese government intended to provide financial support to the largest in the world gambling zone in Macau. Meanwhile, Sprint Corporation shares rose by 6.8% after the company announced it could be cutting as much as $2.5 billion in costs. In a memo sent to staff last week, which was reviewed by the Wall Street Journal, Tarek Robiati, Sprint's chief financial officer, said the cuts inevitably will result in job reduction. And this concludes the weekly review of financial markets prepared for you by Insta TV team. See you next week. Bye.